Good afternoon. We'll just give a minute for everybody to get settled. I'm not used to standing behind a podium, so I apologize. I'm a guy who likes to kind of roam and wander a little bit, but I guess we've got a feed here, a web feed, so they need the audio from this mic. So I apologize in advance. We'll just wait for a couple minutes. So hey, just a quick introduction of myself before we get started. I've been with DCM now just over a year. I joined after a 37-year career in the consumer goods industry, worked for a bunch of large multinational organizations in seven or eight different countries around the world. Largest company I worked for was Mars Incorporated, $40 billion pet care, confectionery, and food company, and was pleased to join DCM. As I said, just over a year ago, and I'm really happy to tell you the DCM story today. I'm going to try to move pretty quickly through this and turn it over for any questions as well. Okay. So of course, any forward-looking statements. I think everybody's familiar with this disclaimer. I will be making some forward-looking statements today, so certainly don't hold me accountable if I'm sure they will deliver, right, James? But don't hold me accountable if they don't. Here's what I want to accomplish today. I want to tell you a little bit about DCM and what we do, who we are and what we do. I want to talk about the better and bigger journey that we're on, and it's a journey that we started a year ago since I joined. And then finally, why invest, and certainly why I have invested in DCM. Okay, so that's the agenda for today. A little bit about who DCM is and what we do. Well, first, I've been attending several of the meetings over the course of the day today, and we're a real company. Okay, we're not a startup. We're a real company. We've been around we're a real company, $235 million in revenue, and we've been in business for 64 years. Okay, so we've been around a long time, and we started off 64 years ago as a conventional printing company, laying down a bunch of printing assets across Canada and managing that kind of print for clients. And we've moved since then to be more of a highly specialized print company, and you'll see in one of my slides coming up, more think of high complexity, right? A lot of SKUs with relatively low volume per SKU. That's where the margin in printing is, okay? That's where the margin is. That's where we play. That center DCM Flex reference on the slide is how we enable a significant portion of our marketing workflow using technology. I'll talk to that in a minute. And the third is a new business that we're standing up, which is a pure SaaS ARR technology digital play. And I'll explain to you why we have the right to play in that space. Okay, so think of us as a company, a real company. And you'll see in one of my final slides that we've got fantastic clients, great capabilities, and good cash flow. So think of us as a startup with those 3 C's, and we'll close on that. So a little bit about our complex conventional print solutions. As I said, this is where we started 64 years ago. We still do a lot of business in this space. It's a big market. You can see it's a $9 billion market in Canada. This is Canada alone. And the market's growing, guys. I mean, the market's growing at 2 to 3%. So print is not dead. All right. But what's happening in the print market is there's a lot more complexity that's being introduced. Think of kind of highly individualized communication. And that's where the big margin pools are. Right. So that's kind of where we play. That will differentiate us to other competitors in the marketplace. And obviously that business spins out, as you'll see as we progress through the slides, some really solid EBITDA and some great cash flow to allow us to invest in our digital journey. Okay. The second is how we enable that workflow. We actually created and actually I love this. I should have told you I consulted for the business for about 4 months before joining, and I discovered that the company had actually built a pretty incredible digital workflow capability called DCM Flex. But because the company was still thinking like a printing organization and not like a digital company, there were fewer clients that were unaware of the capabilities than were aware. Okay, so this is a platform that was built a few years ago. It enables that print and digital workflow, business process outsourcing, print on demand. I can give you 1,000 different use cases across the number of clients we work with, but they're all kind of unique use cases. So think of little human intervention from kind of the design through to the delivery side, whether that delivery side's an actual physical delivery, a printed product, or a digital delivery. Okay? And I'll talk a little bit about the platform in a minute. So about 35% of our revenue today is what we call digitally enabled. So clients that are using this platform to be able to optimize their workflow. Okay, a little bit about the platform, and I'm happy to answer any details later in the Q&A. It's deeply embedded into about 100 clients today. You'll see in one of my later slides, we've got 2,500 clients, so there lies the opportunity. We have about 8,000 active users every day. The platform's been built using some API technology, so connectors, which hence the name Flex. It's super flexible depending on a client's needs. We can stand up a solution for them that directly integrates into their marketing stack or into their MarTech stack. We have 300,000 orders that we process annually and about 230,000 active users. We currently have almost exactly 5 million in ARR, in annual recurring revenue, that we generate from clients that are using this platform. Now, remember I said we've got fewer clients that are aware of our digital capability than are aware. So there lies the opportunity for us to continue to drive that client penetration, and then we'll see that that ARR, that recurring revenue, increase quite considerably as well. There's a quick look at our client list. Probably one of the reasons, there's many reasons I joined the company. This is probably one of the biggest reasons. Super impressive client list. I couldn't believe this when I was doing some consulting work prior to joining. We work with 70 of the top 100 corporations in Canada, 3 of the top 5 government agencies. You can see that we're highly diversified across a number of verticals. There's not a single client that represents more than 5 or 6% of revenue. So hence, the beauty of that diversification. I mentioned earlier, there's 2,500 clients that we work with. 93% of our revenue comes from the top 250. So those are big enterprise clients. And we have a very high retention rate, 97% retention rate. My CFO, James here, I would love to call some of that retention ARR, but he reminds me I can't. In other words, a lot of our contracts are 4, 5, 6-year contracts. So we're super sticky with clients, and with that digital technology, we're even stickier, right? Very hard for a client to lift and shift their business elsewhere once they're using our platform. Okay? So a little bit about that kind of third bubble, that third pillar of our strategy. We call it Assemble, and this is a digital asset management solution. Everybody know what digital asset management solutioning is? So think of a large company has millions of digital files, photography, brochures, manuals, presentations, massive number of files, okay? The pure volume of assets that are being created today, SharePoint can no longer keep pace with the increase number of digital assets that are being created. So it's a platform that allows a client to effectively library all that, but more important than librarying is making sure you've got the proper versioning control, you've got proper access. So, I may have people out in the field that can only access certain files, people in marketing can only access certain files. Also allows for workflow optimization. So not just a library, but think of a library that you can then, deploy assets out of to whatever medium. So use an example of a client that's maybe in the marketing space that does, print advertising, social media, and maybe some direct mail. The assets that they're using can be directly distributed from the digital asset management solution, so edited and distributed. So a lot of functionality. It's a market that has kind of grown over the last few years. I spent many years in marketing, and I'll tell you, it's super frustrating to not be able to find the latest asset that has been created, or, if, I spent a big chunk of my career international, and there may be some great assets created in France, and I'm working in the UK. I can't see what France has done, so I have to recreate in the UK. So it's simplifying all that complexity and actually making those assets available and scalable. Huge cost savings to large enterprise clients. So big market, it's a $5.2 billion market. It's growing, depending on what data you look at, anywhere from 20 to 30%, because only 1 in 10 enterprises today have a solution. And I can tell you, the company I came from, Mars Incorporated, it's just, $40 billion companies just now investing in digital asset management solutioning across their enterprise. So lots of opportunity. This is what I call an inside-out strategy. We've got the real right to play here. We've been in business for 64 years. 64 years ago, we used to take a physical asset and convert it to another physical asset, right? Convert it to print. About 40 years ago, those physical assets became digital. So we needed to figure out how to manage physical assets. So we probably created the acronym DAM before DAM was even created, right? So we actually built that capability 40 years ago. But we've never marketed that capability to clients. We've never brought it out as a business to clients. So we've got the practical experience every single day in our workflow. We're literally managing tens of thousands of assets for clients, right? Every single day, right? Remember, I showed you the client list. And we've got the technology to be able to manage those. So now we're packaging the practitioner, that practical experience we have, with the technology into a real business we call Assemble. You can see on the slide here, we just started down this path. Shortly after I joined, we worked the strategy. We started developing the platform. We already have 10 million in real pipeline opportunities. And we just hired, we've got some good capabilities inside, but we decided to buy some capabilities. We just hired a guy named Steve Livingstone to help us, who's 25 years of enterprise software selling, to help us move these opportunities through our funnels. So we're really excited about this. And this, as I said, is pure ARR. We're talking kind of north of 85% gross margins here. Okay? So think of our business, kind of that conventional business that is being optimized with digital technology and workflow. And then this other business we can now bring to that very attractive client list, which is the digital asset management solutioning business. Okay? So all clear? Okay, now I want to talk to you about, that's who we are, first chapter, right? Who we are and what we do as a company, real company, around 64 years. I want to talk to you about our journey on building both a better and a bigger business. So share some of the numbers with you. On the better business side, we've really leaned in hard to create, accountability, responsibility, and lean out the organization. And you can see that through our headcount reduction. In 2021, our headcount was down 14.5% versus the prior year, and we're down about 35% since 2017. So, one of the principles I learned in my international and my large enterprise organizations is how to drive a lean culture and how to really drive decision making. We took out a pretty significant layer of management as well at the same time. I now have 19 reports. And so we really believe in large spans of responsibility and fewer layers. So that's essentially a delayering and increasing of span. And you can see our productivity by employees increased quite considerably as well over the last couple of years. We've also been pretty active consolidating our footprint. And I think our footprint, you'll see in a minute, is perfect now. We're fully optimized to accelerate revenue. We did some consolidation, a couple of factories in the Toronto market. Did some Edmonton to Calgary consolidation, and we've invested in some new pretty cool digital inkjet capabilities, and you can see the savings there. We've also driven hard on some continued office consolidation, kind of embracing new ways of working. We don't want to return to the old way, so we've introduced a hybrid working model. We consolidated a couple of office facilities, and that saved us, you can see, about $800,000 a year. That leadership optimization I talked about a minute ago is close to $4 million, and the other headcount savings are about $6.7 million. So our real savings initiatives that are kind of on the books through 2021, which obviously we deliver in 2022, $14 million in annualized savings. Okay, so a lot of work really, building that better business through the last year since I joined. We've also done a very good job at deleveraging or reducing our debt. You can see our high water line back in 2019 was close to 80 mil. We're down to 37.1, and you'll see in this next chart, we're very focused on, we produce a lot of free cash flow, so we're very focused on paying down that debt. We did some refinancing, saved us $1.5 million. Our average debt right now, James, is just around 6 points, I think, for that 34. We'll get down to 21 this year, and you can see the glide path by 2026 will be debt free. Okay, that's subject to obviously, if we were to do any acquisitions, which are not planned, obviously. So pretty good glide path to build that better business and reduce our debt quite significantly. And then finally, there's a lot of other initiatives we've done to build a better business, but I thought one that would maybe be interesting to the folks on the call or in the room today is what we're doing in ESG, and we're very active on ESG. We've got clear commitments on carbon. This is one on sustainability. We partnered with Print Relief, and this is in the last quarter. We used 17 million pounds of paper on behalf of clients, and we've reforested 207,000 trees. Basically, every 83 pounds of paper we use, we put a tree in the ground. So we're 100% sustainable for all of our paper use. Clients love this, by the way. We have an exclusivity with Print Relief for a couple of years, and it's resonating very well with our client list. So we're certainly very committed to our ESG efforts. So that's a little bit. That's kind of the high level, 25,000 foot look at our better business. And I want to talk to you about what we've done to build a bigger business over the course of the last year as well. First of all, we did a pre-release. I don't know if anybody had a look at the market today, but our earnings call is not until next Tuesday, James, the 11th of May. We actually did a pre-release because I didn't want to give you academic numbers today, right? I didn't want to give you year-end numbers. I wanted to give you a little look at the first quarter and how we're performing. And happy to say that, very positive first quarter. You see our revenue is about 69 mil, and our growth is in and around 11%. Okay. In fact, it is 11%, but of course, we're just completing the audit. So that's a very solid first quarter. In fact, it's our best quarter since quarter 1, 2018. Okay? Since quarter 1, 2018. Now, I will tell you, people that are new to our business or new to our stock, we obviously experienced some headwinds in COVID. Marketing services company, retail, believe it or not, COVID was in Canada, not in the U.S., of course. Certainly not in Florida or Vegas, as I see. But retail was completely shut down, banks shut down. So, that workflow obviously, was impacted. And, we're now experiencing a combination of tailwinds as well as the better business that we've been building as well. And you can see that in our quarterly growth here at 11%. So I'm really proud of the team actually to have a solid quarter on the books. And our outlook is very positive for the year as well. No, there's no reason at all. Our outlook is very positive. Yeah. We've got very good client momentum right now, like extremely good client momentum. Our gross profit margin into the quarter was very solid as well. As you can see this chart, we put, again, subject to any adjustments. I don't think there'll be any, 20 million on the quarter. And that's well up over last year. And again, the best gross profit that we put kind of on the board since that 2018, quarter 1, 2018. We've also secured some new business wins. I guess just some of the examples where we've really developed, over the last, the course of the last kind of 5 or 6 months, a very significant growth muscle, and it's resulting in some pretty sizable wins across a multiple number of verticals. Again, what I love about this business is just the diversification. We're not vertical dependent. We're multi-vertical and multi-client. And we're very committed to what we call clean EBITDA growth this year as well. So non-adjusted EBITDA. We did some heavy lifting last year, consolidating, letting people go, consolidating the leadership team. But this year we're committed to clean EBITDA. And you can see this number here. This is a clean EBITDA number, 9.4 million. And that is versus a 7.3 million quarter 1 last year, and that's like for like. That's without restructuring. I guess the only one thing I would note on here as well for anybody that kind of follows our story is in that 7.3 year ago, we also had 1.9 million in wage subsidy. Okay, right? COVID, government was kind and helped us out. So you net that out, you see a pretty sizable increase like for like, 9.4. So a good solid quarter on the board, good margin, good client momentum, good solid growth. And, back to my point about that commitment to EBITDA versus adjusted EBITDA. We had zero restructuring expenses in this quarter. I think it's the first quarter in, I don't know, James, a long time since we didn't have any restructuring. So as I said, we did the heavy lift last year, and we're not anticipating any restructuring expenses in 2022. Okay. And then I talked a little bit about digital acceleration. Great performance on our Assemble platform in terms of building that funnel, building that pipeline. We're really excited to see those opportunities move through the funnel, and the penetration now that we're thinking like a digital company versus a print company on our workflow optimization platform. Very excited about the pace we've got there, and we'll see that pace accelerate. So just closing, why invest in DCM and why I have invested? By the way, I've got 3.5 million reasons to care. Is first of all our revenue. This is our 5-year target, and we're clear that we're clear in terms of this target. We worked hard as a team to put these targets in place, and we've got 14 or 15 change management projects to deliver against these targets. Okay, so our revenue growth 5% CAGR over the next 5 years. That'll get us north of 300 million. Okay, it'll get us north of 300 million. So we can comfortably see 300 million in our sight lines or north of that. Gross margin 35 to 40%. SG&A 18 to 20. You'll see in our earnings call we're already in that range, which will then deliver a pretty solid. I should say EBITDA versus adjusted EBITDA, right, James? But a pretty solid EBITDA, 18 to 22%. And you saw numbers earlier about deleveraging. Our valuation is pathetically low, and you see we trade at anybody kind of close to the market. You may have seen a move on R.R. Donnelley. R.R. Donnelley, a large kind of competitor, North American competitor. They have a big operation in Canada. We're bigger than them in Canada, but they went private, and they went on a multiple of north of 7. It was back in February, right? They moved to private equity. So we're really undervalued based on, kind of what we do and how we do it. And it's just about getting our story out and then delivering performance against that story. That's why we're here. And I want to close on this slide. This is kind of where I started. What really excites me about DCM and about the opportunity here, and, frankly, in addition to the clients, one of the reasons I joined is you think of us as a startup, right? We're pivoting from a print first company to a digital first company, a startup with revenue, right? With great cash flow, with incredible clients. And I can tell you, we've got competitors in the digital asset management space that have to invest in commercial capabilities. They have to invest in sales reps. We have 60 sales reps out there talking to 70 of the top 100 corporations in Canada. So we've got great clients. Not to mention our large SME clients, which we can penetrate with a lighter platform for Assemble. We've got, as I said, incredible capabilities, and they're real. This is not storytelling. They're real. We've been in business for 64 years. We have 40 years of experience managing digital assets, incredible advanced tech workflow capabilities, great skill in terms of API architecture. And then we've got solid cash flows. You can see our cash flow last year was 26.5 million. And, you saw our balance sheet is very strong and significantly improving. So, that's just a quick look at ownership. It's about 54-55% insiders, and the balance kind of traded on retail and other shareholders. And then finally, I say this a lot, to my team, and I'll certainly say to shareholders that we've got great momentum in our business last year. If I told you the story of two halves, you looked at first half of 2021, second half, very different halves, since I joined in March. Really pleased with the progress we're making. Great progress on our digital first agenda, clarity of our 5-year strategy, some of the wins we've secured. And my 36 or 37 years in business, momentum, we know momentum builds and drives momentum. So that's our story. Thank you for the opportunity for listening today. And I guess we got time for a few questions, right? We have time for a couple of questions. Got 3 or 4 minutes. Any questions? No? Well, thank you. Appreciate it. Yeah. Yeah, so that's a great question. So right now, what is it, James? 5-6% of our revenues in the U.S., and we've been following some clients there. You know, BMO Harris is a big client of ours in the U.S., and we're expanding a little bit with our emerging markets business right now in that cannabis vertical in the states that are regulated. So we see opportunities there. I'm not going to be clear in terms of exactly because I don't want to tip our competitors to what our plans are. But certainly, if you look at some competitors in the digital asset management space, digital has no borders, and probably one of our closest competitors, and I'll tell you who that is after if you come in, if we connect. They're a Canadian company, about 65% of the revenues in the U.S. And again, this is a digital asset management company. So that's where outside of our conventional business, where we will penetrate U.S. and penetrate frankly international markets as well with that Assemble platform. We think there's a lot of opportunity for organic growth. I mean, if there's some opportunities for us to consider, we'll look at it. We're not going to invest in digital M&A because the valuations, quite frankly, are too high. They're crazy, and we already have the capabilities. We can build a better mousetrap. We can build a better product cheaper than our competitors out there. So why go buy a competitor? Yeah, and you saw our client list, yeah. True enough. Yeah. True enough. Yeah. Okay. Well, thanks for the opportunity to talk to everybody today. I appreciate it.